Well, a very good afternoon to everybody joining us. And this is, of course, the latest edition of Old Mutual on the Money. I am Sakina Kamwendo, and I host Morning Live, a co-anchor there, and, of course, SAFM's Update at Noon. Thank you so much for joining us this afternoon. And you're joining us for a very, very important conversation. And it is, of course, about COVID-19, but its impact on South Africa's economy, on its political landscape, and of course, how we navigate this through the labor force. How has this COVID-19 pandemic impacted all of these? And it has impacted every sphere of our lives. We know that this is, of course, primarily a health pandemic, but it has literally decimated certain economies and certain sectors of economies completely across the world. So we're going to try and navigate through, and also later on we will be giving some advice, because it's not just about mulling over the problems, but On the Money is, of course, about helping you navigate your money issues better as well. So let me first start off by introducing my esteemed panel this afternoon. And we have with us from COSATU, that's the Congress of South African Trade Unions, the biggest trade union in the country, with us Zingiswa Losi, and I see Zingiswa just not with us at the moment. We'll come back to her. We have John Eltz, who's the chief economist at Old Mutual, and Johan, why am I saying John? Because that's John Manyike. Johan Eltz is the chief economist at Old Mutual, and Johan joined Old Mutual as an economist in 1991 after honing his skills in various sectors, including the South African Reserve Bank, the University of Stellenbosch, where he lectured in economics, and a trust bank. So we're in good hands as far as Johan is concerned, and helping us understand everything that's going on. Johan, welcome.
Hi, good afternoon. Thank you very much.
John Manyike, also with us, Head of Financial Education at Old Mutual. John, he joined Old Mutual not so long after Johan in 1995, worked in various managerial positions before thinking up his current role in 2010. And as both Head of Department and Media Spokesperson, he has helped Old Mutual reach millions of people through its comprehensive and free financial education program. And we've done a lot of work with John on Morning Live as well. So, John, good to see you. Welcome as well.
Thank you, and good afternoon to you.
And we will be joined by Dr. Somadoda Fikeni, who is, of course, an independent political analyst, and he is going to join us shortly, as will Zingiswa Losi, the president of COSATU. And perhaps, Johan, a good place to start would be by taking a look at the global economy right now. We know that previously things were difficult. You know, we were looking at perhaps 3.3% economic global growth forecast, but now we're looking at a contraction rate that really is going to hurt everybody.
Yes, and it's unprecedented. It's worse than the global financial crisis in 2008, 2009. But it's somewhat different to the global financial crisis. That was a financial crisis, so it had far more impact over a far longer period of time in terms of the down cycle, but also in terms of the up cycle in a far longer period. And yes, there's lots of risks now, as we know, around the virus, renewed infection rates, worries about the second phase of infection rates, renewed lockdowns. But the nature of this cycle is such, through the lockdowns, the halting of economic activity, and then the ending of the lockdowns, that it's a far shorter and sharper cycle. So sharp down cycle, but as lockdowns ended, sharp up cycle. Plus, always to remember that policy support this time around from governments in terms of the fiscal side, tax cuts, other money being spent into the economy, plus also the monetary side, interest rate cuts, plus the QE, quantitative measures that central banks are taking. These policy measures are far more extensive, not only in the global economy, but also in South Africa, than what we saw during the global financial crisis. So what I'm talking about is a V-shaped recovery, sharp down cycle and a sharp up cycle. That doesn't mean it's not a lot of pain for a lot of people. So there's still lots of pain, but the cycle is recovering in the global economy. And we see that through currencies, we see it through commodity prices that's recovering. We see it in Chinese GDP growth, the down cycle and the up cycle. So it seems it's playing out. And yes, South Africa is a very small but very open economy, meaning that we trade a lot with the rest of the world. So the world recovering will help us a little bit.
The world recovering, but what is our own recovery forecast looking like at this point, Johan? Because we haven't even seen the peak of the virus in South Africa yet.
Yeah. So a couple of points there that I want to make. And the first one is, that we've already had weak economic growth before this crisis started. So the average annual GDP growth over the last 5 years in South Africa was just 0.8%, less than 1%. Less than 1% in my mind is almost zero. So almost no growth over the last 5 years. And then 4 out of the last 5 quarters was negative growth. So already in a recession before this crisis hit South Africa. And we can talk later on about what that meant in terms of the fiscal position, the budget balance, the debt ratio, etc. But in terms of the economy, in terms of employment, all these things, we haven't had growth. And now the crisis hit. And yeah, we will also have a V-shaped cycle, but that's short term. What I'm more worried about is the medium to longer term growth forecast. Are we going to get out of this weak growth environment, or are we, what some people say, in a low growth trap and we're going to get stuck there? And that's the worst possible position. So all the pressures have been building in terms of getting policy reform, getting this economy out of this growth trap to get to a more substantial, better growth path, but on a sustainable basis going forward. So short term, yeah, recovery, but more important, what's going to happen in the longer term? So in my mind, always South Africa's biggest single problem, because everything else hangs on it, is the lack of economic growth. Lack of economic growth is the biggest problem.
And as you say, we will dwell a little bit more on that in terms of how do we dig ourselves out of this hole as a nation, because part of the problem is that we have a private sector that doesn't seem to be very happy, that's not trusting at this point, and that's not investing in the local economy. But Zingiswa Losi is with us, the president of COSATU. Zingiswa, of course, a jobs bloodbath, not just in South Africa, the world over, but we were already in a very, very deep problem as far as unemployment goes. So looking at the Statistics SA latest survey on this, 30.1%, and that is the official unemployment statistics. We are told that unofficially this number could be greatly higher. So give us your view on what is currently happening, and of course also it would be helpful if there's a global comparison to be made.
Thank you very much, Sakina, and greetings to the panelists and the listeners. Indeed, as you have put it, this is a very difficult time in our economy, but not just in South Africa. And as we say that, it is difficult for us to know the exact impact that coronavirus, for example, has in the South African economy. But as you have said, that the numbers are rising of levels of unemployment, companies are closing down, workers are being retrenched, and what we are calling for, as Johan have said earlier on, is indeed an economic growth, but also, as COSATU have said, that what we are looking for is for a government that is going to, COSATU, for example, called for a 1 trillion stimulus when government said 500 billion, because we understand that 500 billion is really not what is going to get us out of the situation that we're at. And it is not just now because of Corona. Before we even got to go to a lockdown in our country, already workers were sitting at over 30% of unemployment in this country, and companies were closing down. We were already just on the eve of lockdown, being downgraded by rating agencies. And we are saying as a federation that this is a crisis that is going to demand private and public sector and social partners to come together and really focus on what is in the interest of South Africa. We cannot at all times rely on foreign direct investment, as much as it is good, but we need to grow our economy. And just in the few days, we were faced with the corruption allegations. And this is one thing that eats into the economy of this country. Anything that goes in, we are all excited about the billions that we're going to get from the IMF, but it is not going to help us if those billions are already planned to go to private pockets and not indeed be invested in the economy, because every worker that loses employment, Sakina, represent 5 or 6 members in the family. And the statistics of unemployment of 40%, for an example, are not just about workers. It's 40%, but also add those that are going to be languishing in poverty as a result of that one member that is counted in the employment statistics.
And before I continue this discussion, please, if I could just welcome everybody who joined us this afternoon. Thank you so much if you've just come through. But we are running a poll, 2 questions we have for you. How confident are you in your own ability to fulfill your own financial obligations right now, given everything that's going on with COVID-19? That's the first question. And the second question is, of course, we want to know about some of the other issues that you are dealing with as well. So you are free to participate in our poll. We'll come back and update you on what's going on. And if you have questions, we'll come to those and put them to the panel later on. Professor Somadoda Fikeni has also joined us. Thank you so much, Prof. But before I get to Prof, let me come to John Manike, because this is a very difficult time for households across the country. And many people would say, for example, to me, John, but you've not been affected because you were frontline staff and therefore you've been working throughout. However, there are people who have not been dependent on me, who are now dependent on me. So it's not a simple straight line situation as people would like to think.
No, that's very true. I mean, we recently conducted a survey, which is the Old Mutual Savings and Investment Monitor. And what you are seeing there is that about 57% of the people that we survey, and these are predominantly people who are living and working in the major metropolitan areas. And 57% of them are saying they're actually earning less than what they were earning at the beginning of the lockdown period. We have another 58% who are saying they are worried about their financial situation. And 66% are worried about losing their jobs. About 37% have fallen behind, their financial obligations as a result of COVID. So the impact is so huge, and we're also seeing an increase in the number of people who are saying they actually have adult dependents. And I think also to the point that the Comrade President was referring to. So we are seeing that there are a lot more people who are saying, compared to the same period last year, they now have more adult dependents. And I think quite understandably because of the requirements, to sanitize. And of course, in terms of food supply and so on and so forth. So this is definitely a matter that needs some serious attention. I'm hoping that today we can give South Africa some hope at the end, so that it's not about painting a doom and gloom picture, but also being able to point out as to what are some of the practical steps that we can take in order to cushion the blow and to survive this period.
Which is why I wanted to bring you in there, because it's not just about lamenting the problems, as you say, John, but we'll also try and offer some solutions throughout the show. And then Zingi Swalose, I just want to come back to you before I put this question to Professor Somadoda Fikeni. You said that as COSATU, you actually wanted $1 trillion investment from government, but COSATU is an integral part of the tripartite alliance, and you would be very familiar with the discussions around the balance sheet of the country. So do we have R1 billion to actually pump into this effort? $1 trillion, I should say.
Yeah.
So again, look, even the president has said that we need R1 trillion. It's not just COSATU, but it is about the reality that the country is facing. Look, Because this country has a lot of money. We have a lot of money. Sometimes we may not need to go outside this country to look for money. It is just how we're managing our country, how we're managing our finances in this country. And if we were to get rid of corruption, if we were to ensure that anything that we get, for example, we have been calling for industrialization for years in this country. We are moving ahead and talking about black industrialists, and yet we're not reindustrializing our country. So we indicate left, we turn right. And we're saying until we get to know exactly and get the right people, get the correct people, because we have so many people in this country that can provide solutions, Sakina. This 1 trillion rand is something that is possible. Look, for an example now, all of us are angry because what we have seen as the first tranche, what we are getting as news that there are alleged 3 million that are doing door-to-door on COVID education, and yet when you go to the ground, you realize that people are not even being screened. They don't even know about this COVID. No one is coming. So take just 3 million. It's a lot of money. So 1 trillion is possible. It is how we spend the money. What we're getting from the IMF, what we're getting from others outside, it is about how we're going to spend it. Are we directing it to where it should be? There are millions that are sitting underneath our soil. We have always been calling about these things. It is about the right people in the right positions that are going to do exactly what South Africa is needing. We have had enough conferences diagnosing. We know what the problem is. We just need to get the correct people. As we always say, it must not be about how close proximity you are to certain levers of power. It must be about whether you can be able to deliver. Universities in this country have so many people that have graduated who know what is correct. We have solutions for our country. Can we stop importing and start experiencing from our own academias that we have?
Interesting, the way you posit that particular thought, Ms. Losi. Professor Sumadoda Fikeni, if someone arrived from outer space and they just landed on Earth and they happen to be watching this webinar, they would be shocked if you told them Zingiswa Losi is part of the leader of the biggest trade union federation in the country, that is an integral part of the tripartite alliance, that is, of course, an integral part of the ruling ANC in this country. So how do you read into the comments of Zingiswa Losi here?
Well, the tripartite alliance has always been a marriage with a lot of problems, with no external counseling. So that is the first problem. The other problem is the one of a broad church concept of the ANC. It doesn't matter where your sentiment might be. If you say we're going to be a broad church and there are classes which are more organized to lobby in the policy space, those at the bottom of the socioeconomic ladder will always suffer. And the fourth one has been the assimilation. The ruling party has become a genius of making sure that it contains extreme critiques because there is a promise that you may become a minister next time. You may become an ambassador, you may become something else. So if you behave well and you contain your anger, then your future career is quite lucrative in a sense. So there are many permutations to the tripartite alliance. Of course, COSATU, SACP have voiced their frustrations from time to time to say it looks like we are more important next to elections, but we are not given the influencing space when it comes to matters of, policy making and so forth. So that policy fragmentation comes out of that. So don't be surprised if Zingiswa speaks the way she's speaking, because she might be equally aggrieved, but is tied by the political matrimonial arrangements.
This must be a very difficult marriage right now. But, Johan, if we look at the policy response from government, and Zingiswa, I would imagine, would be closer to this because, as I say, that association and with what is going on right now. So, but if you look at what government has done to date in order to respond to this pandemic, what are your views on the policy formulations?
I think ever since the start of this COVID crisis in South Africa, government's response has been far better, far more proactive, far more decisive than ever before, in terms of responding to the crisis, in terms of responding through policy measures to try and support the economy. If we again compare to the global financial crisis, which was the other big recent recession in South Africa, great response. But then we unfortunately are limited in what we're able to do, given that this crisis started off from a position of far more weakness than the previous crisis in South Africa, in terms of growth, in terms of where the balance, budget balance was sitting, in terms of the debt ratio. So it was difficult. And I respectfully disagree. We haven't got R1 trillion to spend in this economy. If I may share this slide briefly, if you look back to the start of the global financial crisis, GDP growth was the purple line here, or the maroon line, was above 5% per year. The budget was actually in surplus, and the government's debt ratio, the green line, was less than 30%. But as the situation evolved over the last 10 years or so, growth slipped substantially from that above 5% to far weaker pattern. As a result, the budget deficit became bigger and bigger and bigger. And you know, in your own household finances, if you keep on borrowing every month, your debt just keeps on rising. So the green line just went up, the government debt to GDP ratio. So it was far more difficult to respond to this crisis than if the economy has been in a healthier position. So the 500 billion spending package wasn't all new spending, as you know. It was some reprioritization, some of it coming from the UIF funds, some of it loan guarantees, etc. But it was a great response. But I agree, we need to do more. I totally agree there. But that needs to come through policy response to lift economic growth.
Can I come in there, Sakina?
You may, Prof.
To me, I do think that let's not take the actual figure that Zingiswa presents, but the principle behind. Which country would have had an SA Express which died maybe 3 years ago, but we continued keeping it and bailing it? Which country would run 3 capital cities, Cape Town, Bloemfontein, Pretoria? And have we ever costed those? If you look at district municipalities, local municipalities, provincial government, national government, sometimes they duplicate the same services. If you look at South African international delegations, they are sometimes bigger than USA, China combined. For any conference, because we've become obsessed with conferencing, and some executives actually have 40% of travel allowances being 40% of their salaries. So the issue of inefficiency in how we use resources is one of the problems. Now add that to the pandemic that doesn't listen to any vaccine, called corruption. If you look at the amounts of monies that have been used, and each time the government is priced, it's overpriced. If you look at the construction companies colluding during the World Cup, all those things taken together, you realize that there is a problem. Never mind that the former President Thabo Mbeki once said the private sector, whenever he had this advisory committee, they were saying, in comparative terms, it looks like it's sitting on finances or stash of, cash instead of investing it in comparative terms to other countries. Why is that the case? There is no trust and people are sitting on those. So we should be talking about the efficiencies and the lack of duplication and corruption, it may not be the exact amount, but the lack of political will to do something from both public sector and the private sector might be contributing not only to this economic crisis, but also to the growing inequality, which is not sustainable.
But we have in South Africa managed to create this corruption ecosystem where it flourishes, it feeds very well in that ecosystem that it has created. And it seems as though we are incapable, Professor, of getting out of that at the moment, because, and this is something that we shared, you have a municipality posting a tender for a packet of matches, 6 candles, and paraffin. How? You can buy that stuff out of petty cash.
Well, I do think that I start with this quotation from Samuel Johnson. Chains of habit are too weak to be felt until they are too strong to be broken. It has become the culture. Once your economy is not doing well, once people are not given professional spaces to start their businesses, once your education system tells you that you must have a certificate and seek for a job instead of creating one, once the youth is suffocated by all this corruption, then everybody will see politics as the only way to go through. And I can tell you that most of the people who join the ANC might hate it with passion, but they just know that once you are able to flash that card, go to that gala dinner, you'll get the network, you'll get the tenders. And the sad thing is that even where DA was involved in places like Tshwane, we saw a similar situation. VBS allegations are showing that the net is wider. Where UDM was involved in the Nelson Mandela Bay, you see the same. So we might just be having a deep societal crisis. Steinhoff, for example, the private sector corruption, some people decide not to even talk about it. It is beyond their reach. So that to me would be the starting point to say, let's reflect on the general culture which has weaved itself through everything, that of corruption. You can't even contain borders because you can get passport either the legal way or non-legal way. You can start business legal way or non-legal way. So that is the main problem here. But I want to say on a positive note, it takes a crisis of this nature for many countries. It was the Great Depression that forced the Society of America under Roosevelt to rethink its strategy and created many public works programs. It took a crisis in Rwanda for them to reposition themselves. It was the Peninsular War in Korea for them to rethink and reshake their economy. So we could either waste this crisis or use it wisely.
Well, with that, Ziggy Swalosi, one has to look at this current situation, and as Professor says, perhaps offering an opportunity to reset, but how? In the current context, because we spoke about the job losses, and many companies are contemplating retrenchment at the moment. So the question then becomes, what is the role of trade unions and trade union federations at a time like this when your members are losing their jobs? What do you offer them?
What we have been doing as COSATU and other federations and trade unions, for an example, at the level of NEDLEC, we have been participating in the NEDLEC Rapid Response Team dealing with the UIF COVID-19 temporary relief. So at the policy space, we have been engaging at the level of NEDLEC. The things that we see that are happening are as a result of the outcomes of NEDLEC, where we participate on a day-to-day basis. We have teams there that are indeed ensuring that even the extension that has been made up until August for the UIF payments is as a result of those interventions that trade unions are making at the level of NEDLEC. But I must also say that, taking from what Dr. Somadoda have said, we have always, even the president during the past 2 State of the Nation address, made an emphasis in terms of the local economy being the stimulus to grow the economy. You know, the challenge that we have, because that is possible, and that is what is going to ensure that in the local economy grows. It is about government stimulating that and ensuring that real entrepreneurs are recognized. What we have as a challenge, Sakina, is that if you go to provinces, if you go to municipalities, there are genuine entrepreneurs who really have products, who really have ideas. But before you can get government to assist you, you must first pay a certain amount. That has got nothing to do with you doing the job. But if you really want to be granted an opportunity to partake in the economy in this country, there are politicians. You would have those that are sitting in the offices working with politicians who are expecting you to pay before you can even be granted an opportunity. And the question is, how are we expecting then those small businesses to strive and also be able to make an opportunity of creating employment in this country? Because others get to close because they are not paid in due time for them to be able to pay to buy the next stock and be able to keep workers at their own establishment. So at the bottom of it all, as Dr. Somadoda have said, corruption is eating the moral fiber of our society. No genuine business person is, others have even lost hope, but you will find that those that still find it easy to go in have no products, they have no business to do, but they're ones that will get the tenders from government, that will get the businesses, but you will find nothing that points to employment that has been created by those. But what they will do is, the outcomes you will see when they buy lavish cars and living good and living big, and you know. So the problem that we have is that it's really frustrating, because job creation is possible in this country if we all understand what we need to do. Stimulating the economy is all possible if you understand what we have and what we do. As Dr. Somadoda has said, that the crisis presents an opportunity. Challenges present opportunities. COVID-19, what it has taught us, for an example, as trade unions, is that we have always argued that we are not ready for the fourth industrial revolution. But immediately when we were put on a lockdown in less than 48 hours, we realized that the old way of doing things has to change, and we have to adapt to a new normal. We have to embrace what is not going to kill us and say, what are the opportunities that are presented by this crisis? So there are new sectors that we must venture into. A lot of business people have moved from the normal businesses that they have to what COVID-19 has made everyone to go into. Leave corruption that has now been exploited by people using the PPEs as what is needed. But we are saying every opportunity, every crisis creates an opportunity. And as a trade union movement, we are always, with all other trade unions, saying, engage us. Businesses must not just say, we take an opportunity because now we have a crisis that is global. We are going to take a shortcut and retrench workers without venturing into opportunities that the business can do. So we're saying retrenchments are not the only solutions to the crisis, but because trade unions, we don't own the means of production, we expect that as partners, as social partners at Network, as stakeholders in all these enterprises, we want to be engaged so that we can all sit together and say, what are the opportunities that exist, and how can we manage to say, if we are to lose employment, it is not going to be at a huge scale, but how are we going to minimize that and maximize the opportunities that exist? South Africa is a country that is filled with opportunities. Sakina, nothing is impossible. Really, Africa as a continent is a continent that is filled with opportunities. South African business does not only have to sit here at home, we have to go up. You know, everyone says South Africa is a gateway to Africa. Why is South Africa not seeing that gateway, but everyone else comes through us to enter the African continent and take all the resources and let them live, and leave Africa as a continent being the most poorest continent with the most lucrative resources that we have.
And I'll ask Johan to weigh in on that, but I want to just perhaps challenge you slightly on owning the means of production. Whilst that may be true, you may not own the means of production as a trade union, but you do have resources. Solidarity last year, which is, of course, a smaller union than yours, they have started the building of a university in Centurion. So unions do have resources. Unions do have money. So what is the biggest trade union federation in the country's balance sheet at the moment? How much do you have? And what are you doing with that? How are you upskilling your workers, preparing them for the fourth industrial revolution, which is going to also kick in as another part of this problem after we've dealt with COVID? What are you doing as a trade union federation?
Indeed, Sakina, even at the level of the federation, as a federation, we may not have a university, but we know that, for example, POCU as a union in the police and correctional services space in the security cluster has built its own university. It is training their police officers, and we have other trade unions within the federation that are also have investment companies, as you may put it, that are venturing into the space. But what we're saying is that where we are located in terms of representing our members, that's why we said we don't own the means of production at that level. But also owning a university does not mean that you make profits out of it. What you are doing is to work with other universities to ensure that we upskill workers. And this is what COSATU is also doing. We are working with the Department of Higher Education and in ensuring that we upskill and reskill workers using all different kinds of sitters where we are located. And this is what we have been calling for as a federation. We have always said we need to review.
But I'm not talking about government resources. I'm talking about union resources. How much money does the union have? How is the union using its resources to help its members, especially at a difficult time like this?
So the trade unions, as I've said, that they do have programs that they have individually. COSATU is a federation of all these trade unions. We do not have the resources that unions themselves have. Unions do take training and take their members to different training academies that they may be working in collaboration with other institutions. But what we're saying is that where we are located as different unions, we do focus on skilling and reskilling of our members. But I must say, Sakina, that we may not all sectors may have embraced, in terms of trade union, what has been coming. You know, everyone has had a pushback in terms of realizing that the train is moving and all of us need to adjust and move along. And what we have said as a federation is that we need all our trade unions to ensure that we are able to do skills audit within the trade unions itself and also in the sectors that we operate, so that we can be able to understand when we want to make a contribution into how a different organization, a company, can be able to move, shift, and adapt. Our members must not be found wanting. They must be ready for that shift. They must possess the relevant skills that are going to be needed to where the company is going to be taking forward to. So we are participating at different levels. In terms of the balance sheet, of course, I may not be able to give the balance sheet of the federation. We have had a congress where we did disclose how much we have, but of course COVID-19 came and every union now is really struggling because we are losing members. But ours is to say, how are we going to adapt even to that? Because we have understand, even for ourselves, for our own survival, for our own service to members, we need to adapt to different platforms and different ways of ensuring that we really speak to what a member needs and what a member has to really take forward in for its own survival in the kind of economy that we're in.
All right, we were running a poll. Thanks so much for your participation. We asked you, how confident are you in your ability to fulfill your financial obligations right now? And that poll has now closed. We'll be running a second one shortly, but let me give you the results to our first poll. And 17% of you said you are very confident that you will be able to fulfill your financial obligations right now. That's 17%. 49% somewhat confident, and 32% not confident at all. Now, John Manyike, if you look at those results, are not unexpected. I must say, I'm actually quite pleasantly surprised that it is
me too.
better than I would have expected.
It's 66% is somewhat confident and more confident.
Yeah.
It's quite positive, the result.
It is much more positive than I would have expected. So that is an upward surprise at the moment. But then, John, Zingiswa spoke about their members losing their jobs, the retrenchment rate. TransUnion, the survey that they conducted this was in May, showed at that point 14% of people had already lost their jobs. So people, their packages may be paid out now, severance packages, but given the uncertainty that also exists moving forward, they probably don't know what to do, where to start, what to take care of. So what advice would you dispense at this point in terms of getting a lump sum of money and dealing with the debt that you may have?
Yeah, I think this is the point, this is the intersection where we need to be encouraging South Africans to partner with their financial advisors, So I think there's a role that the financial advisor would play in our lives at this point in time, because if you're suddenly going to be getting a retrenchment package and you don't have a plan, there's a risk that within a short space of time, that money will disappear and you cannot point exactly what you've done with the money. But also, I think there's a risk of people going into panic, others making an arrangement with credit providers when in fact there are other options that are available, such as, for example, even the credit life insurance. So I think a lot has been said about payment holidays, but equally, I think there's been an outcry about the need to financially educate consumers about exactly what kind of financial products or solutions they have that could actually protect them during a shock of this nature. And I think we've seen that there's been a lack of financial literacy around some of these solutions. Again, for another example I can give there is people who are now suddenly working from home and who have a short-term insurance, say in the form of a car insurance. Unless you know that actually there's nothing stopping you from phoning your short-term insurer to say, actually, my credit profile has changed because I'm now working from home. Most of the time the car is parked. Yes, you will travel, but it will be short distances, probably to the shops. Those are the things that, the financial sector is open, but I think what is lacking there is there's just not enough financial education for people to know. I have testimonials of people who have said, well, they sat in one of our financial education workshops, and they've actually gone on to speak to their credit providers. Others, they've gone to speak to the short-term insurance, and they now have a reduction of up to 600 Rand per month on their car insurance because then they were able to speak the right language. So these are the kind of things that we need to be talking to people about. You can't just rush into making an arrangement because of panic when actually you might have other options that are available. So those are things that we talk to people about. And we want to also take this opportunity to make a plea to corporate South Africa and say, we want to offer financial education at no cost. This can be done virtually. I think we're now living in the world of Zoom, Teams, the different online platforms that can be used where we need not worry about social distancing. So we want to offer this financial education where we talk to the workers about, talk about this credit life insurance. What other options are there? To the extent that people make informed financial decisions. knowledge is very crucial, because when a person knows better, they actually do better. But you cannot blame a person who doesn't have the knowledge. We're also seeing a trend of people instead shying away from even engaging, with credit providers when they're falling behind. And we're saying this is the time to actually be engaging as opposed to running away, because then you are likely going to lose your assets if you actually don't make efforts to try and deal with that situation.
I saw a question here quickly, John, from Deepak, who wanted to know how does credit life insurance actually work? Because it was, again, one of those funny things whereby people almost discovered it by chance, and then it became a thing. But I didn't see insurers initially coming out to even tell people you actually do have such cover.
No, absolutely. I mean, and I'm glad to say that we are definitely on record for the past 2 years. In the media platforms, we've been actually educating South Africa about, credit life insurance is one of the options. But again, it's not something that we can do alone. I think there's a need for a collaborative and concerted effort, for the financial sector to be focusing on educating people. But I think in response to that question, I think it's important to highlight that a credit life insurance is a type of insurance that's designed to protect you in the event that you are retrenched, in the event of death, but also it will offer protection in respect of disability, whether it's permanent or or temporal. But also it mentions loss of income. But we also need to understand that different service providers might have slightly different terms and conditions as far as how it works. But there is regulation that guides the sector as to, how or what this type of insurance should do. So it can actually cover your installment after 12 months or until you get a job, whichever comes first. And this is why we're saying before you make an arrangement, find out if you do have one. It is also reported that only about 25% of credit consumers actually have a credit life insurance, because again, others might have it and they're not even aware that they actually have it. And because you don't claim, you're not aware, you then quickly avoid taking calls and you end up losing your assets, you end up having summons and so on. So it's very important for people to understand that. Even with the premium holiday, we need to understand a premium holiday does not mean a holiday of interest. So you need to understand what are the terms and conditions of this premium holiday, so that you can make an informed decision at the end, because it might mean, yes, you might skip 3 months, but if they recalculate and then they factor in that interest, you might actually end up paying more. It's also important to remind those who don't actually need a premium holiday not to take it. You only take it when it's when you're in a dire situation, when you really need it, because you might take it and only to find that you're actually paying more. So we must make use of even the low interest environment, to use that a bit of saving to pay off some of that debt.
Well, thank you so much for joining us, everybody. This is Old Mutual on the Money. And this week's theme is, of course, COVID-19 outlook on the economy, politics, and labor. And in case you've just joined our webinar here this afternoon, we have with us from Old Mutual, Johan Els, also John Manyike, Kosatu Zingi Swalosi, and Professor Somadoda Pikeni, a political analyst. Let me just ask you this, Johan, from Rahadi, who says, private sector is not going to invest to improve the lot of the black population despite profiting off apartheid. Steinhoff is a good example. They run shops that target low-income population, and then they make huge profits, continue to recognize their customers as human beings. Are they? And this goes back to that whole issue of not investing in the local economy.
Yeah, that's a very specific question, but I need to address part of that. No matter who we are in South Africa, no matter race, religion, whatever, we're only going to do business to make a profit. And we can argue whether that profit is moral or not. Private business is a huge part of this economy. Private business will only participate if they can make a profit. And that's true the world over. That's true whether you run Steinhoff or a Spaza shop. So confidence is the biggest issue in my mind in terms of getting investment, getting growth. No business will want to invest or expand his existing business if he's not confident that better economic growth will be forthcoming in the next while. And so if you ask me, what do we need to do in this economy to get growth going to a higher growth rate, to a more sustained basis? I want to show you this graph. And firstly, to explain it, the green line is economic growth. You can see how economic growth picked up from the mid-1990s onwards. The red line is a result of a survey the Bureau of Economic Research does on a quarterly basis as part of their business confidence surveys. Bureau of Economic Research, of course, part of the University of Stellenbosch. The question they ask businesses, is politics a constraint in your decision to invest in your own business? And you can see how that constraint has come lower and lower in that green shaded period where I say there was little concern about politics and policy. Now, of course, thinking back to those years, President Thabo Mbeki was president, Minister Trevor Manuel was Minister of Finance, and the current Minister of Finance, Minister Mboweni, was governor at the Reserve Bank. There was lots of confidence in the economy, so the red line was low, little concern about all of that, and growth was high. And then throughout the last 10 years, that red line moved up, more and more businesses and consumers and investors concerned about politics, concerned about policy, and growth came off. So the one single thing we need to do, raise confidence through a whole bunch of policy measures to make sure that we as consumers, businesses out there, investors out there, when they're confident in the politicians to make the right policy that will get to higher economic growth, they'll invest in their businesses. They'll hire more employees. More and more people will have money to spend. Government will have more tax incomes. So everything rides on growth, but growth rides on confidence. So private businesses are here to make a profit. You have to provide them with the policies and the confidence to invest. So they don't invest if they're not confident that they're going to have growth to make profits.
But Johan, I thought business would be more confident in the presidency of Cyril Ramaphosa, and that we would see a bit of a difference.
Yeah, that's a very good question. But you see, throughout the previous 8 years, before President Ramaphosa became president, I suppose, I haven't got facts, I suppose we got a little bit disillusioned. We get promised policy measures. They're very slow to be implemented. It takes time to implement these policy measures. There's lots of discussion about these things, but they're not implemented. So disillusionment, it takes a while to turn around that negative feeling, to turn around and convince people that this is coming. I do get the sense, though, that the president is serious about this. Talking about and using the words whatever it takes type of approach. One of the other panelists mentioned this is a new normal. We have to do new things. So yes, that's true for all of us. We have to accept that we have to change. We have to do these new things. We have to do things that might be very unpopular. But that's the only way we're going to get out of this weak, no growth environment.
Can I come in there?
Unpopular things, because I want Zingiswa to weigh in on that as well. But first, Professor, as you respond, a question to you from Paul Kariuki. And Paul says, for Dr. Pikeni, what major political and policy changes are we likely to see in the coming months, given what we presented with right now?
Well, I would start by simply saying that initially the handling of this COVID-19 gave a boost to President Cyril Ramaphosa. It raised his profile. But the implementation and the easing of restrictions and how it has been mishandled, issues of corruption, may actually embolden some of the people who may want to unseat him. and challenge him. Remember that ANC is highly factionalized, and people were sharpening their tools and weapons for the policy conference. And now anything that comes out right now, I can almost hear some of the people who were being cornered by the state capture salivating at the disclosure that some people within the president's office and so forth might be implicated. So that is going to be a political football if he doesn't handle well, which may become an albatross. Therefore, in the coming months, maybe next year, when you have an ANC policy conference, it will determine the balance of forces. It will determine the confidence in the president and how he has handled things. He will have to be more decisive because there is an increasing perception and frustration that he might be working very hard to please everybody. And you may end up displeasing everybody, and also trying to deal with the internal dynamics and unity of the ANC, which at times is at variance with national interests. So he will have to move very fast. The window of opportunity is closing very fast if he is perceived to be weak.
Absolutely.
Then the challenge to him will be worse. He may not even make it to the second term. The second part is what would have been the watchdog, the DA, has been busy in a corner mutilating itself unprovoked. As a result, right now it has a deep crisis, that of leadership. And it has not settled down yet. It mishandled the Patricia de Lille matter, the issue of its relationship with the EFF and so forth. And they then brought back Helen Zille, whose prime time has passed. Helen Zille has brought back the bad omen because she has a way of viewing things. And she promised to keep her lane, but we see that she's been staggering to every other lane of late. So the main opposition has its own challenges. And EFF will have to deal creatively with the issue of VBS because that too is knocking at its doors. So the political class has its own crisis. Unions are more likely going to experience challenges as members lose jobs and they make demands. Then the space is going to shrink. Remember, this is also an opportunity for the corporates to apply and use machines to say we no longer want to employ people in the banking sector, for example. We will be using machines. As people are working from home, they'll get used to that fact. So you are going to have a very tense period going forward. And as people search for answers to say, how do we use this opportunity? The issue of corruption, of course, is going to be one major determinant.
Well, you're watching Old Mutual on the Money, and our second poll is running. In case you haven't seen it, do you think your financial situation will change for the better over the next 3 to 6 months? Please do let us know what your views are on that, and we'll share the outcome of that towards the end of the session. But Zingi Swalosi, and this is where I want to bring you and Johan in almost simultaneously, because firstly, how much of a concession are unions willing to make given our current financial situation and the fact that business has been almost steadfast in their refusal to budge because they're waiting for what they call favorable conditions in which to invest? So you've heard this before. It's a stuck record. What sort of concessions, if any, would COSATU be willing to make?
Well, Sakina, it depends on what is on the table. You know, at Netlet, we have said to business, even way before COVID came, that when we were meeting in the Presidential Working Committee dealing with the implementation of the Job Summit outcomes, as organized labor, we have asked business, because we were taking stock as Netlet constituencies on how far we have come since the Job Summit, the promises that were made, commitments actually, and the implementation. And realizing that business, instead, what it has done outside the Job Summit commitments, it had immediately after sent Section 189, certain companies. When others have said we're going to create 10,000 jobs in the next 10 years, they have then gave unions retrenchment notices of 10,000 jobs in the next 2 months. So the question was, for what Johan was saying, the favorable conditions. Which conditions must be favorable such that business in this country will indeed have confidence to invest? Because when they make these commitments, they don't raise these frustrations. They are part of the processes at NETLEC where policy is also discussed and spoken to. They participate at different platforms. And when now they must invest, they tell us, this is what business told us, that actually the commitments that we made in the Job Summit, we have no obligations to stick to them. So it will be upon them when they see fit. But remember, you have taken the country into confidence. You have signed on this thing and you have said, this is where we want all of us to be. And we've said, let's move forward. So that is why the Federation always says, let's level the playing field. We can't speak of concessions and when we don't know what others are prepared to do. You know, there was once a document where it was said that, I think it was the new growth path of government, when they wanted a chapter where they wanted unions to have a concession. And we said, we're prepared and willing to come to the table and have concessions on issues of not demanding increase and all of that. But we also want business to also have a concession that they're not going to give themselves bonuses and all of that. And business said, we can't be told by government, no trade unions on how to reinvest ourselves. Now, you can't then expect trade unions workers to sell their labor and have concessions, and others in the same field are continuing with their lives, you know, earning 10 times what workers are earning, whilst the ones that are really ensuring that the business is afloat is workers moving from home, risking their lives and going to work and ensuring that that business is kept alive. So that's why we're saying we need to level the playing field. We need to play open cards. We need to put things on the table. Sometimes business always says, we're going for retrenchment as an example, because business is not doing well. When we say to business, put your finances on the table, then some become reluctant to do so. But how do you convince us for us to really understand the plight where you are at if you're not prepared to open your books and allow us to see exactly how the business is doing? So if we are to have concessions, we need all of us to understand where we are and where we are going. Because, I mean, we don't want a car that is driven by people and we say we're following and people indicate left. When we're turning left, they turn right and say this is every moment where we turn, we always turn in this corner. So we need to know exactly what is it that we are dealing with as all social partners in this country. That is why NETLEC is so important. That is why labor at NETLEC has always said, when we discuss policy issues, we want those that are owning the means of production. We want the captains of industries to come to NETLEC so that when decisions must be made, we're able to make those decisions. But after making such decisions, what we have seen, Sakina, which is disappointing, is that on a number of concessions that we have made, on a number of decisions that we've made at NETLEC, businesses on the ground will do the opposite, and others claim that they do not know, they have no idea of what is taking place at NETLEC, they were not told. And I guess perhaps the same goes to all of us who are NETLEC constituencies. But what I'm saying is it is difficult to say these are the concessions that we are prepared to make without understanding what others are bringing on the table. When we have clear communication lines, when we are honest with each other, when we understand the bigger picture. And I think as South Africa, what we have missed now since the dawn of democracy is to know what is it that brings us together. Hence, others are pulling in different directions. And until we get to that situation, I think levels of trust are really very, very low. And we have discussed this issue at the level of NETLEC as social partners, that we really need to work on trust issues. because it is what
But for
moves.
how long? How long are we going to work on trust issues? As you say, NEDLAC as a forum is supposed to provide a vehicle, an opportunity for all the various key stakeholders to come together and find solutions. But you guys seem stuck because we keep going around the same circle. And as you respond, Johan, quick one from Luvuyo, who says, a question I would like to pose to the private sector in the absence of this so-called confidence that you speak about, Johan. At what point is the private sector willing to rescue the economy and assist the previously disadvantaged communities to deal with this current pandemic?
Okay, I'll try and answer that as I respond. Firstly, I do not speak on behalf of business. I'm not privy to what business is thinking. I'm not participating at NEDLAC. I do agree that a social compact, an agreement, a contract between government, business, and labor is hugely important. So I agree with the trust issues that needs to be sorted out there as well. Remember, business does a lot, but business will only come if they're confident about that growth. You cannot expect business to just run charities. They do. A lot of businesses do a lot for charities. Business wants to make a contribution to this economy. The president has said a long time that private sector involvement will save this economy. The private sector is very willing to be investing in this economy. We recently heard about all the more than 300 billion rand that the private sector will be investing in the future of this economy, part of the president's infrastructure investment project. But as a starting point, maybe we should look at how are we perceived? Where are the positives and where are the negatives in terms of the SA economy? So this is a result of the World Economic Forum's annual survey, the Global Competitiveness Index, and it presents our rankings amongst all the countries there. Now, what I've got in the tables here is 2018 versus 2019. Late September, early October, we'll get the 2020 rankings. The graph on the table on the left shows the main components of this global competitiveness survey. And what is positive there is that in institutional ranking, we sit number 55 in the world, and we've improved quite substantially from 2018. There's a lot of other stuff that's great. We're number 19th in the world in terms of financial system. Innovation capability, number 46 in the world. Skills not so great at 90, product market 69th. So there's a mixed bag of stuff there. Lots of good stuff to the table top right. Budget transparency. Okay, the budget itself isn't great, but the transparency is number 1 in the world. Road connectivity, market capitalization, cost of starting a business. But there's lots of bad and ugly stuff. And now, whether you or me agree with this, that's not important. This is the result of a survey. This is the perception of investors out there, local, but mostly foreign as well. So whether we agree with the result doesn't matter. It's the perception, because this perception will drive investment. And we do need foreign investment in this country. We cannot run it alone. As a brief aside, our budget deficit this year is exactly the same as total domestic savings. So what if we finance the budget deficit through local savings alone? What is left for investing? So that's how the budget drives out the private sector. But in terms of that table, the bad and the ugly, it's the crime stuff, it's the policy stability stuff. We rock bottom in the world, and it's ranking out of 141 countries. So education, labor issues, and what foreign investors tell us, and again, these are perceptions. Why would they build a factory in South Africa when they have to employ South African labor? And their perception, I'm not saying this, don't shoot me, is that South African labor is expensive, uneducated, and militant. Foreign investors doesn't like that. So part of the social compact, yes, you asked what will labor bring? Private sector will bring more investment, more employment, participate in the growth of this economy. They're committed to this. Again, I don't speak on behalf of private business. I haven't got those links. I speak as an economist. I've seen throughout the years the linkages between economic growth and investment and employment. Back in 2004, 5, 6, 7, when the economy was growing more than 5% per year, we did see the unemployment rate coming down. So you need strong growth year after year after year after year. Then you'll start making inroads into the unemployment levels. So it takes some time. But the whatever it takes approach, unfortunately, also means that the difficult decisions that we talked about earlier, the very difficult decisions. And so government must change policies. And in my mind, again, I haven't been privy to discussions. My mind, those changing policies should also mean significant restructuring of state-owned enterprises. Significant. That should include privatization. It should. It should include labor market deregulation. And I know the unions doesn't like this, but it's only through those extreme policy change, the whatever it takes approach, and the social compact. Government will change policies, labor will accept it, in my mind, because they will benefit from significantly stronger economic growth and significant higher employment in this economy, and business will make more profits and invest more and employ more. So it's a circular effect throughout the economy. So radical policy change is needed, yes, and we don't want to hear it, but it is now or never. It is use this crisis. Otherwise, we're not going to get anywhere. Otherwise, we're stuck into this less than 1% growth per year. Unemployment keep on rising because it is that deregulation of the labor market. Think about the US job market, a very free job market. In a recession, yes, lots of people lose their jobs. More than 20 million lost their jobs in this COVID crisis, but they're already busy recovering. Over the last 2 months, more than 5 million have already regained their jobs. Quick cycles, job losses, but quick recovery. In the South African economy, because of regulation in the labor market, it's businesses tell us this, difficult to get to retrench people. And once they do, they don't rehire them back. And that is the problem. We need businesses to hire people back after the economy starts rebuilding again. And for that, yeah, sure.
Please stop.
Yes, I do think that for us to have trust in the country, we need to have an honest, difficult conversation. There are certain things that when business speaks, they avoid. And there are certain things that when labor speaks, they avoid. And certain things that government speak, they avoid. There seem to be an ideological blind spot. Let me give you a simple example. South Africa has a deep structural problems that has enabled inequality, where you cannot do 90% of the population because the concentration was newer sectors, you have monopolies. Other countries which are a lot more competitive do not have the kinds of monopolies. They do not have to deal with 4 banks which become alpha and omega for many things. So that's the first thing to say, can even the private sector by private sector standards survive and be competitive when you do have such high concentration of wealth or monopolies in each sector? That's the first one. The second one is the point that Zingiswa raised earlier to say, we obsess sometimes ourselves with global external investment, which is very important, not to underplay its role. But we have seen that small, medium businesses, when they are assisted environment created, they are labor intensive, therefore they employ more people. But if you deal with the bigger businesses, they can inject 10 billion only to employ 400 people. So those are some of the things we ought to be talking about. What are the trade-offs for such a social compact from the private sector side and from the public sector side, from the unions? But most of the time, you find that it is the kind of a dialogue you normally would find between a pig and a hen saying, I help with breakfast because I contribute eggs. Then the pigs say, I have to die to contribute a bacon. So here it is those painful trade-offs where one doesn't say, I'll cut my nails, but for you, you must amputate your arm. What is the patriotic duty of business sector, of the labor, of the public sector and so forth, so that such a social compact shows that each sector has gone out of its way. Don't underestimate what the former president Thabo Mbeki said. His economic advisors, some from Harvard, from everywhere, when they were doing the global comparative analysis, they said South African businesses are sitting on massive cash. Even at the time when laws were regulated, when there was gear, they say, we're still waiting for the right environment. But they were making a killing. And when things get worse, they say, you see what we're talking about. So here there is a fundamental deep trust issue where whatever you are doing, like a witch, if you smile, they say, hey, he's trying to do something to me. If you frown, they say, yeah, you look exactly like what I suspected. So here we must be very honest. Thank you.
John, let me ask you quickly, because quite a few people worried about, their businesses, small businesses, and obviously the individuals as well. So what do they do in this instance where the economy is being decimated and people are asking, for example, if you have that money, is it a good idea perhaps right now to look at starting your own business given what is going on?
No, I think one thing is very clear, that you cannot afford to stay to being too fixated or married to a single income, especially if it is the same income that is still being chopped, as a result of the lockdown and COVID-19. It is not a concept that I think as South Africans we are highly socialized on. I mean, very few South Africans have an entrepreneurial mind. And I think it's an open secret that some of the great economists in the world, they thrive because of small businesses. Yes, we've set up structures, to try and encourage small business. I'm not sure if we are winning in our quest to try and promote or create an environment that's conducive for small businesses to thrive. But having said that, I mean, there's different forms. I mean, there's of course the formal sector, and there's also informal businesses, which are also equally important to the economy. So I think we need to start at the point at which we encourage people, or we cultivate the culture of entrepreneurship. Having a side hustle, as people usually call it, I think is very key during this time. There are people who have other ways to supplement their income, but we need to be trained on how to identify the gap in the market. Very simple thing like, let's take, for example, people living in the townships where you can easily have a room there. We know that the rental thrives in the townships, with what we call back rooms, and there may be other options. I mean, I'm only mentioning that particular one, but it is very, very crucial at this point in time to start looking beyond what we are used to. We need to think outside the box, so that we can try and supplement our income.
Speaking of, Mark Pendlebury says, as a small business owner, I was planning to expand my business this year, and now I'm petrified, and I'm rather looking to take that money and try and expand overseas. Good idea?
Yeah, it's a tricky one because it's not that overseas is immune to what we are seeing here. Corona is also there, and then the other question is that how do you export this? Your goods. I mean, with all the different challenges that are there and with restrictions. But of course, there's no harm in exploring. I mean, if the writer is able to identify a spot there, go for it. But we need to definitely continue looking for those opportunities.
If I may jump in there.
Johan, before I give you an opportunity there, let me just quickly give the results of our second poll there that has closed. We asked you, do you think your financial situation will change for the better in the next 3 to 6 months? And the results, 22% said yes, 51% no, 70% maybe, and 7% no idea. So again, I'm actually quite surprised by that somewhat, because I was expecting a much more pessimistic view to emerge, but seemingly not, at least from the people who've joined us for this webinar. But I want all of you to start factoring your final comments as we wrap this up, because we have about 9 minutes or so. But Zingiswa, Johan, did you want to speak directly to what John was saying, or
yeah,
is it
I wanted to add on to that, but it'll also serve as my wrap up, because the question was, should that person invest more offshore than onshore in South Africa? I believe that we've got lots of challenges locally. We know what they are. We've always managed to come to some kind of solution, and yes, maybe it's playing out slower than what we need or what we expected, but I strongly believe that the winds of change are blowing in South Africa. In other words, the tailwinds are busy picking up and the headwinds are dying down. Things are busy improving, and maybe it's too slow, maybe it'll pick up in pace, who knows? But I strongly believe that when I compare it to the last 5 years that I said earlier on, just 0.8% annual average GDP growth over the last 5 years, I strongly believe the next 5 years will be better than the past 5 years. Through all these programs, through our commitment to get to better policies, to get to better growth, even if growth only picks up towards about 2%, it's not great, it's a long way off the 5% plus we had, but it's far better than the 0.8%. So next 5 years, better than the past 5 years. We'll see that in business, we'll see it in the economy, we'll see it in confidence, we'll see it in asset classes, in investments as well. So, yeah, as John answered that question, yeah, it's always good to diversify, it's always good to look for other opportunities. My view is next 5 years in South Africa will be better than the past 5 years.
Zingiswa, and you may take this opportunity also to respond to what was said earlier about, for example, the South African labor force being militant and all of those other issues, expensive, and looking at where we want to go, where we're headed. Your final remarks.
Thank you very much. Labor force in South Africa has always been militant. It has been the driver to where we are to attain our own democracy in this country. So it's not going to start now to becoming weak. But I think for me, we must also address the issue of illicit financial flow. A lot of money is moving out of this country by big business, and it's not being invested and reinvested into the economy. As much as business can complain about the political instability, what they think policy should look like and all of that, but the reality is SARS in its illicit financial unit, economic unit, it has money to recoup and trace back. So now we're talking about, I think, 2.6 billion of rand, and they continue to look for this. So there is a lot of money that is getting out of the country, which is done by big business. And I agree with Dr. Sumadoda that we need to really pay attention into the small, medium enterprises. Look, when workers are losing employment, when workers' wages are being slashed, it means their spending ability is being slashed. So whilst the demand may rise, but the ability for workers to really spend into the local economy is being taken away. And that will also put pressure to government, because when workers are retrenched, when they have taken out of the UIF savings, they go back to the social security net. And when more people are not employed, it means we have less into the tax revenue that is supposed to be also ensuring that people are having that security net. So ours, I think, as a federation, is to say that we need all hands on deck. We need all minds. South Africa, we need to really look into what we have. We have economists, we have academias, we have a lot of people. We have universities that others outside our country are coming in to get the necessary skills and knowledge that they need, but we rely on picking on what other countries have done. And I think as soon as South Africa finds solutions that are going to work for our own economy, opportunities are there. Can we use those opportunities? You know, simple things like when ESCOM is having its challenges, COSATU came up with a paper on how we can deal with issues that are facing ESCOM. But immediately there, you had other people that are saying we need people from Italy, we need expertise outside this country. And I doubt if we don't have what we are looking for outside. And when those people are coming into South Africa, we need to pay them in dollars and in euros. And yet we have those that are called analysts, you know, in the aviation sector, for an example, when it comes to SAA, who are going to give us their own opinions. Why are we not tapping into them when they are available to give us their opinions? But when we want expertise, we said we don't have any. We need to go to the US to bring expertise to come and solve our own problems of aviation in this country and pay them in euros. We think that a lot of money in this country is going out, and yet people that go to university graduate. We have a lot of graduates that are unemployed because we have closed our eyes on what we have produced as a country, and we rely more on what is outside. And they bring nothing that we do not have in our country. As soon as South Africa gets its confidence back to its own citizens, I think really the opportunities we're speaking about are limitless.
Professor Somodota Fikeni, how do we move forward from here? How do we use this opportunity that COVID-19 presents to recalibrate?
The first one, fixed leadership at political level, at business level, at union level, because you need to have strong leaders who have a vision driven by conviction. The second one, fix our institutions, because if institutions are not capable, even for law enforcement, for delivery of services, you have a problem. And the next one would be to fight corruption ruthlessly and make example even out of high-profile people. And the next one would be to come up with a social compact where all partners are coming together, riding on the fact that you now have Solidarity Fund, you now have more interaction between the unlikely partners, and lastly, have a vision and draw inspiration from many other countries. Some were razed to the ground by world wars. Within a few years, they were out of that. And many others which face crisis emerge even better on the other side. So this is a great opportunity, but we cannot squander it, because if we squander it, it will take a lot for us to drive and claw back. It's no longer time for us to settle scores and be sectarian, but rather say what is the bigger picture and also understand what the global context will be. Thank you.
Well, Old Mutual on the Money offers of employees free financial education workshops to help navigate the current storm. John, your parting shot for us. How can we best navigate this storm?
Yeah, so I mean, if there's one key takeout from a consumer financial education point of view, I want to again reiterate that we want to partner with Corporate South Africa. We want to partner with trade unions to offer financial education to members, you know, because this is not a time for theory. It's time to give people very, very practical tips and steps in to contain the financial challenges that they're experiencing. So for those who have access to members from a trade union point of view, but also employees, please do email us at financialeducation@oldmutual.com, and we'll gladly assist with providing the financial education sessions at no cost. Thank you.
Well, thank you so much to everyone who participated this afternoon. Professor Somadoda Fikeni, and he's an advisor to UNISA and political analyst. Zingi Swalosi is the president of COSATU. John Manyike, head of financial education at Old Mutual, and Johan Eltz, chief economist at Old Mutual. And to everybody else, truly appreciate you joining us this afternoon for this edition of Old Mutual on the Money, and do look out for the next session. Thank you so much, everybody, and goodbye.
Goodbye.
Thank you.
Thank you.
Goodbye.